Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, July 12th, 2021. And our top story today, ESG, Fad or Future, and the SEC looks to define ESG more clearly. Joining me now to discuss this and a lot more, Bob Colley is principal and founder of Colley ESG. Bob, great to see you. Thanks so much for joining us in the program again this morning.
It's always nice to be here, Jeffrey. So thank you.
And I love tapping into your institutional knowledge, I'll call it about that, because not only are you an expert in ESG, but you're an expert in research when it comes to investment. So it's always nice to kind of leverage both of those skill sets. Let's jump in though, Bob, because I want to ask you just a question. We're seeing a lot of money over the last few years flow into ESG. Is it ESG, as it's defined, environmental social governance, is that fad or is it future?
There's a fad element to it. Obviously, topics become hot and cold and blow around. But behind that, there is something that's fundamentally changing about the economy and about investment. So if we look at the economy, the expectations of corporations in terms of how they behave, how we expect them to be good corporate citizens, effectively, just as we expect individuals to behave, not just within the law, we expect them to be good people. Well, we want corporations to behave well as well. And increasingly, that means we want them to act in a way that is sustainable, that pays attention to the environment and to a lot of other factors as well. So I think there is a growing emphasis from society that's saying we want a little bit more from corporations than to be just money-making machines. So that's here to stay.
Yeah, and let's talk about that marketing element for a second, because I see a lot of articles, and some of which I shared with you, that if you're a chief, none of us are marketers, by the way. We're investment professionals, or you're an investment professional by trade. I don't know what I am, but when it comes to marketing, there's an element here around marketing yourself, whether, not even if you're an investment firm, if you are a car company, a technology company, a Petco, for example, a pet supply company, there's an element here about marketing yourself as an ESG or environmentally friendly brand. And so there's that balance act there between marketing and selling and investing.
There absolutely is. And again, as you say, my background's not brand. I don't know a lot about brand, but I do know one thing about brand, which is that if someone's coming across with something that doesn't ring true, that doesn't really have that feel of authenticity to it, it doesn't work. And so if companies are jumping on the ESG bandwagon, jumping on the sustainability bandwagon, and it's marketing led, I think eventually that falls apart, because what you don't have there is something that's embedded in the culture, something that's real and is going to last within that company. So I think those organizations who kind of would like to be greener or would like to be part of this wave, but aren't really there, the truth does out eventually. You can spend a lot of money marketing and get so far, but at the end of the day, this has to be something that's authentic and is embedded in the culture of an organization. We don't talk enough about company culture, but at the end of the day, the companies that have a good culture are better placed than companies that have a good strategy, because culture is where it's really at in terms of driving the long term of any organization.
Yeah, really good point, Bob. Let me ask you about this. I want to dispel one of these myths, and having been in the investment industry for 30 years, like yourself, I mean, this is a myth that I've heard, and I want to get your sense of whether it's still a myth or we can bust this myth, and that is investment performance for ESG related investments. Are you guaranteed to underperform a benchmark like the S&P? And this is a broad question, so I'm not asking you to provide financial advice, just some generalities here. Can you outperform an index even if you are adhering social screens like environmental, social, and governance? It seems from what I'm reading, just to kind of tee this up for you, it seems from where I'm reading that you can outperform an index. But I want to get your expert opinion.
It is. certainly the studies that are coming out now, you read the literature, it's almost too good to be true in terms of the performance from ESG strategies. And maybe that's just to do with the period of time we've been going through, or current conditions. But the academic studies, certainly the overwhelming majority of those at the moment, either say that there's no discernible difference in returns, or even that there's outperformance from ESG strategies. And as I say, that side of things may be too good to be true to say, well, you can have your cake and eat it too, that you can outperform and be green, because it feels like that's a little bit too much. But certainly the underperformance side of things, I think that all those studies do effectively dispel that you're not necessarily going to get below market returns by going into ESG strategies. Now, the one caveat on that is that there are some ESG strategies that are consciously impact driven, and they're going into market opportunities knowing that these have below market returns. So I think there is a segment of the ESG market which tend to be called something like impact investing or something like that, which may come with an acceptance that we may underperform from this. But if you set those aside, the broad category of investment strategies that say, no, we're going to look at sustainability, we're going to look at carbon footprints, we're going to pay attention to the governance within an organization, how focused it is on diversity, a lot of different issues. Those strategies, there's no sign from the academic literature that they tend to underperform. I wouldn't want to sell them on the basis of outperformance, but to say that they're necessarily going to underperform, there's no sign of that at all.
Yeah, and again, not trying to put you on the spot, it's not a 0-1 game. It's not black and white here. It really varies fund to fund, and I think what's important about this is you got to have transparency. Bob, I want to take a very quick break, and when we come back, we'll talk about the Securities and Exchange Commission attempting to clearly define what ESG actually is. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Bob Colley of Colley ESG. Bob, thanks as always for staying with us this morning and putting up with me.
You're good.
All right, let's kind of, we had a great conversation, fad versus future. It's certainly it's a trend. I think that this is really important for a lot of reasons, and dispelled a couple of myths. Let's talk about the importance of transparency and our friends, more my friends than your friends because I live in the U.S., in the Securities and Exchange Commission, really working hard to define what ESG means. And Bob, this has really been a challenge for many trustees of retirement plans, endowments, foundations, and big pools of assets.
It is, and certainly the US is not alone in this. And in fact, some of the most advanced work around the taxonomy, sort of naming of different products, it has been done by the European Union. So I wouldn't be surprised to see the SEC taking a leaf out of some of the work that's been done here in Europe and maybe adapting that for the US market, or certainly trying to learn the lessons from that. One of the big lessons that I think you can draw from the EU's experience is that while you can go so far in terms of naming, you're always going to, it's never going to be perfect. You're always going to have some things around the edges. So the EU work to date certainly has found it a lot easier, for example, to come to grips with some of the environmental issues than maybe with some of the social issues and some of the human rights issues, for example, which are equally important in a lot of ways, but they're much harder to pin down. So the naming thing is certainly not just a US problem. So the SEC is not alone in trying to face it, but it's definitely one that is not going to be solved easily.
I mean, Bob, I think it's very analogous to, in the U.S. retirement industry, the target date fund, because every target date fund, is unique in that it has a certain asset allocation, it has certain underlying investment options, it has certain fees and expenses, and really how you use that target date fund in your retirement plan or personally is really dependent on the ecosystem that you're putting it in. So doesn't that create that challenge? If I compare Fund A to Fund B or C or D, how can you find similarities in order to benchmark them? I would think that'd be very difficult.
It is, and
that's an understatement.
Yeah, it is, and here, I think the market's going to do a lot of shaking out in terms of working out what do consumers actually want, what are the issues that they really care about, and sometimes you don't quite know what's going to take off within a market until you've tried it. You don't know which issues are going to really resonate with investors, and which types of products are going to be the ones which actually attract the most interest and ultimately the most money. So you have to stay a little bit open rather than saying, well, here's what we're going to mean by a green product, and here's what we're going to mean by something that's a human rights focused product, and being too specific about what you're looking for, because that might not be what consumers really want. So the work around the naming is more about making sure that people aren't misleading, that I'm not claiming to have a green product when really it's just a completely normal product that I've managed to make a couple of tweaks to that I'm managing to just market as being something that it isn't. So it is more about avoiding misleading consumers rather than defining what a product ought to be, because that's something for the market to work out for itself. And that's something that markets are very good at, is coming up with solutions that investors actually want.
Yeah, and this heightened interest by the SEC, I mean, if you pair that with what happened, and these are not the same, but I'm just bringing it up, what happened with the meme stock investing, GameStop is the one that we all have heard about. Is there an element here about protecting, and you seem to indicate this, protecting that consumer? And I'm not saying the consumer, the trustee, the person like yourself who's a sophisticated investor and works with sophisticated investor, they're in a great position to analyze and do the due diligence that you need to do. But what about the end user, the person like me who is not as sophisticated in a lot of ways, by the way? Is this kind of along the same lines? We got to protect the consumer here because he or she could have some challenges down the road if things don't work out.
That's definitely a huge motivation behind this. It is that is to prevent mis-selling. In effect, I mean, there's a lot of people out there who like the idea of investing responsibly, especially if it's not coming with any kind of return penalty to it. If you're able to say this is a flat out mainstream top quality investment product, and by the way, we're managing our carbon footprint, or we're managing the social justice within it, whatever it is that's the social issue that matters to me. Well, that's a great thing to have. And so it's quite right that the regulators would say, hold on a second, let's make sure that people aren't making these claims that they can't back up with within the actual product. So that's right. I mean, the only thing I would disagree with about the question perhaps is the assumption that professional investors have all the answers and they're able to do that due diligence. It's in this area in particular, that's sometimes a little bit challenging as well. So but ultimately it is the retail investor that is in most need of the protection as you talk about, and that's going to be a big motivation. Here in Europe, that's definitely a motivation behind the EU actions, and I'm sure it's a big motivation behind what the SEC is doing as well.
Yeah, and I guess, I mean, if you're a student of finance like yourself and someone who's in this every day, I think you have a better acumen and understanding rather than someone who's saying, look, I want the air to be cleaner and therefore I want to go to a clean air fund. I'm just making it up. I don't know if one exists. I'm sure it does. And I think there's definitely some differences there between investor types. Bob, I guess last question. When could we expect? I know there's a lot of work going on in the EU around this issue. Any sense for when we might hear from the SEC? I know you're not a legislative or legal expert, but just what you're hearing in terms of what they're probably going to go out and query people and say, what do you think? Meaning people from the industry like yourself. But any ideas when we could possibly see some new regulation or legislation?
Well, I mean, the big sword hanging over this whole enterprise really is the electoral cycle in the US. I mean, as you'll be more than aware, with the House and Senate elections coming up next year, if there is a change of hands in the House in particular, well, it's going to be a lot harder to get anything else through. So given how quickly the administration has jumped on this and how fast they're moving, there's every indication that they're saying, well, let's make sure that we get something done while we still have the presidency and the House and the Senate. And so that's not going to be the end of it, I'm sure, but definitely the window for getting things through, it's much easier over however long we've got now, another year or so to really push this forward. And there's every indication that that's what they're trying to do. They're not hanging around on this, and that's probably why.
Yeah, I always feel like a ping pong ball between administrations because we're either for a fiduciary rule, we're not for a fiduciary rule. We're either for ESG, we're not for ESG. Oh yeah, we're for ESG. I guess we'll have to see what happens this summer and into the fall. It's election season, and that always colors people's points of view. Bob Colley, it is always a pleasure chatting with you, getting your perspective. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Always a pleasure. Thanks, Jeffrey.
Thanks, Bob. Great to see you. Thanks for sharing your perspective. That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow, so until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.